May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you can afford to lose. Hello, 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 and good morning. Welcome to QuantBox Daily, half an hour before London Open. So let's have a gander. Starting off with our fundamental bias, QuantBox Pro, Euro Dollar. So looking for changes, Euro Dollar still a strong sell. Pound Dollar, still a strong sell. USD CAD is still a strong buy, well, a buy. Aussie USD is still bearish. And Kiwi Dollar, yesterday we saw Kiwi Dollar being neutral, and Kiwi Dollar remains neutral. In our yen pairs, Aussie Yen remaining bearish, CAD Yen remaining neutral, Euro Yen remaining neutral, Pound Yen remaining neutral, and Kiwi Yen remaining neutral. So not much difference from yesterday. Let's take a look at our charts. Right, so in terms of yesterday, did you have any opportunities to sell the Aussie dollar in terms of price being at resistance on the daily time frame? No, you did not. That's okay though. We look at the next time frame. We're still bears. In terms of the 4-hour, price not pulling back to 21, price not pulling back to any kind of resistance. Okay, cool. No opportunities in the H4. So having a look at the H1, did you have a chance yesterday to drop it like it's hot? Drop it like it's hot. Drop it like it's hot. You can see there. And you can see, okay, I don't like this trade being so close to the profit-taking zone. Okay, but you could verify on a M15. Personally, I'm not a fan of that trade. That one over there, cool. Okay, pulling back to that 21 EMA. And then over here, personally, okay, me personally, just me, right? Not you, me. I'm waiting for pullbacks on the 4-hour time frame. Now, unfortunately, we currently find ourselves here on a Tuesday, which means what? Well, we expect to be there by Thursday. Does that mean I can do a counter trend trade? No, it doesn't, because my fundamental bias is bearish. Could I be short-term long, long-term short? Well, that's a different decision then. Then I'm acknowledging the fact that I am doing a counter trend trade and I'm looking for an opportunity to take this back up for profit taking. And I'm acknowledging the fact that I'm going to be counter trend trading according to my bias. However, I have to be very, very, very careful to make sure that I verify the trade completely. Okay. So, you know, if I look at this candle over here, this 4 o'clock candle, it is the last 4 o'clock, it's the last 4-hour candle to close before the London market open. So what I could be doing is I could be looking at the H1 chart and looking at the close of this candle, which is the last candle to close before London opens. And I could be looking at this time frame and saying, okay, do I have any indication of bullishness? What would that look like? Well, how about a higher high, higher low? Now, I don't see anything on this time frame. Let's have a gander at the M15. Do I have anything on this time frame? Not yet. Okay. So there would still be some setups that I have to look for. You know, price breaking the 55, coming down, reversal pattern, higher high, higher low. That would take some time to set up. So maybe not London, maybe New York. But I would have to have some very, very solid price action to indicate this is bullish. Remember, how many higher lows do you get in a bearish trend? None. So a higher low would be a very good indication of the fact that this might be reversing. Now, the nice thing is that I don't have to worry about, should I buy, should I sell? I'm a bear. But right now, as we can see, I'm currently at a profit-taking zone. I do not want to sell down here. Why would I want to sell down here? Okay, this is where bears take profit. So I could literally sit and watch Aussie USD at these levels and just ignore, you can see there's price action there, 21 there. This could still continue dropping, but I'm making a decision to not continue trading this based on where price is. I do not sell at profit-taking zones where bears get out. I just don't do it. Okay, so I could be paying attention to this potential counter trend trade all the way up to WPP. Okay, fantastic. At some point today, but I need to see some significant indication of bullishness on one of the charts. You can see M15. I don't care if this is an inverse head and shoulder pattern. I'm not looking at the pattern. What I'm looking for is a higher, higher, higher low. If I see price closing at a roll reversal a bullish role reversal, and I can verify that price is neutral when it closes at that role reversal, i.e. price is broken support, support has not become resistance, and price is closed at a role reversal, I'm happy. It would be nice to see some kind of reversal pattern before that takes place. We all know price breaks the 55, that predicts double bottom or reversal pattern of some kind. Pricing comes up, makes a higher high, price comes down, makes a higher low, 1, 2, 3 hammock, and then counter trend trade this up to the weekly central. Cool. At the present moment, I don't have that set up. For the euro dollar, we can see here slightly different. Now, one of the things that Wayne spoke about last week was the potential for consolidation on the euro dollar and the pound dollar. Okay. And you can see on the daily time frame, look at how we did not make a lower low last Friday. We have not made a higher high and higher low. So it's still technically bearish, but looking up like things have slowed down quite a bit. On the H4 time frame, we never got a pullback to resistance. Okay, resistance over there, 21 EMA, cool. If this pulled back up and I hit a 21 EMA in the 4 hour, I wouldn't have any problem selling it as long as I can verify the trade in lower time frames. I'm not at a profit taking zone yet. Okay, but remember, the only way in which we can sell out of position is if I've got a decent distance to target. I'm not going to sell so close to target that only make it a couple of pips. I'd rather wait for the opportunity to get the profit taking. But being aware of the fact that I would definitely be going against my fundamental bias, but knowing that I'm trading that profit taking and I've got absolute 100% confirmation of bullishness in the form of a hammock or a 1, 2, 3. Okay. Otherwise, price coming up to the 21 EMA is totally fine. A role reversal is totally fine. Just verify that very carefully. That's still in line with bias. Okay. If one of those two things don't happen, i.e., I don't pull back to significant resistance, and I can't take this down further, or something happens, like for example, the H1 time frame, you can see their price currently at a 21 EMA. Okay, coming up into the London session. Something I'm paying attention to is like, this drop over here, it's quite shallow, right, for 21. So price bouncing around. I still prefer my trades being set up on a 4-hour time frame. I just see it as getting more pips. And so me personally, I'm waiting for some opportunity on the 4-hour to take that down. If you were looking at the H1 timeframe and you were looking to sell off 21 EMA at the open of London, you're going to need some indication of bearishness on the M15 timeframe. Now we can look at this M15 timeframe and I look at this and I say, doesn't look bearish to me. All right. Why do I say that? Well, my concern is that these candles here have come up, broken this resistance. The resistance has become support. We've broken this 21, broken this 55, like a bit of consolidation over here. You can see a little sideways market over here. And what is interesting is that price came up to the bottom of this range. And despite hitting the bottom of that range and the 21 EMA, price then shot up. Okay. So I would need some clear indication of bearishness in order to sell this, which is why I would not be trading the H1 time frame. And even if that means I miss out on the trade, so what? That's my personal method of how I trade. I would be looking for opportunities on the 4-hour. Okay. But I'm not, the only way in which I would buy this is if price is at a profit taking zone and I get serious confirmation of bullishness. I'm not buying it over here. I'm waiting for opportunities to sell because of the fundamental bias. Staying disciplined. Pound dollar, taking a look at this, same story, different version. We can see here, 21 EMA, 55 roll reversals, waiting for price to come up. You can see in terms of this being slight consolidation, our candle, London bias candle, closing at the bottom of this range, that doesn't bode well for me in terms of bearishness. Closing at resistance would be a lot more helpful. And we can see also here, a little bit of consolidation going on the H1 time frame. Looking at the M15 charts. So we had price come down, price pulled back to 21, price came down, price pulled back to 21. We hit this 21, we came back down, maybe just setting for market open. But again, I am waiting for pullbacks on the 4-hour. You might be using the H1. You might be verifying that M15. That's fine if you are. Okay, as long as you are able to confirm bearishness and you're in line with your fundamental bias, then go for it. I just personally prefer H4 trades because, you know, I get a lot more bang for my buck. Looking at the Aussie USD, I think we already had a look at this. Okay, we've had a look at Aussie, we've had a look at Euro, we've had a look at Pound. Kiwi, I'm neutral fundamentally. I'm not even going to look at it. USD CAD, you can see there was a pullback there to the 4-hour 21. Okay, consolidation price, sort of this low being higher than this low. Okay, cool. Pricing comes up, comes down to 21. Opportunity there at the 4 o'clock candle yesterday. Opportunity here at the 12 o'clock candle yesterday. And there's a potential trade off that 4-hour 21. The only way in which you could take a trade out of position is the 4-hour 21 or bullish integrity. In the case of a trend, roll reversal. In the case of a range, bottom of the range. You can see there this candle closing at the bottom of that range. And so you had bullish integrity and you had the 4-hour 21. So there was an opportunity there. If you didn't take that trade, then I would just wait. Okay, look at how far you are completely out of bounds. Now is not a good time to buying this. Okay, Aussie yen was the only yen pair we've got that is not currently showing neutrality in fundamentals. Okay, and we're currently at a weekly target. So that's Aussie USD and Aussie yen currently both at weekly targets. You cannot sell down here. This is completely out of position for selling. And so it's the same strategy as Aussie dollar. I'm looking for some indication of bullishness. So I could potentially look at taking a counter trend trade. Right now, my M15, I do not see a higher high. I do not see a higher low. I don't see price closing at bullish integrity. So right now, nothing says bullish on this time frame. And even though price is sitting at a 21 EMA, I would not sell this. Why? I do not sell at, if I'm a bear, I do not sell at places where bears take profit. I do not trade out of position. The only way I can sell out of position is if price is coming off a 4-hour 21. Okay. Now, there are obviously trades that one could have taken if you're using H1 time frames, whatever else. I just prefer to keep things clean and use H4. Now, so far as my Swissies are concerned, if we take a look at my dashboard, looking at the top buys, top sells, gold still in the list, pound dollar, euro dollar, Aussie USD, Aussie yen. All right, cool. Let's take a look at gold. So let's just jump into a watch list over here. All right, so there we got gold and similar situation, price coming down, looking for that pullback and looking for resistance 4-hour on the H1. You can see we haven't really pulled back. There's lots of M15 trades here, riding at 21, riding at 21, riding at 21. If that's your bag, that's cool. I'm waiting for that pullback on the 4-hour, and I remain bearish on gold. Okay, if you did ride the 21 on the 15-minute chart yesterday, you had a beautiful day. Okay, these sessions are not focused so much on technicals. You have plenty of lessons on technicals, plenty of sessions with Wayne. Then there's the Tuesday Stop Looking Correct with myself. So that's where we just basically review the last week and discuss trades that we're in and various topics, risk management, trade management, entries, tactics, strategy, the works. Very, very cool session focused on a number of different subjects, right? It's basically focused on how you can bring control, consistency, and confidence into your trading from a risk, strategy, or tactical perspective. Then you've got weekly swings with Wayne, and you've got day trade with Wayne. So there's plenty of technical meetings where you can get your strategy and tactics up to scratch. What I'm saying in this session is that, and it also flows into the other sessions, the focus here is have a fundamental bias. Once you know that you are a bear fundamentally, not just any fundamental bias, not just a loosey-goosey, I kind of think this is bullish or bearish, like a detailed fundamental bias where you've got data that's backed by someone who understands fundamentals, i.e. Wayne, that you can rely on. But again, remember, you know, look at Aussie USD. Yeah, it's saying sell, but you got to remember, if you're not in position for a sell, then you want to wait, okay? This is not the right place to be selling. Doesn't matter what the fundamentals say. You've got to marry fundamentals with technicals, okay? You got to be good at both. The nice thing is that QuantBox saves you the time and hassle of having to work this stuff out. And it's the money and the education. You can use this tool. It's beautiful. Rely on it. Then you can become really good at technicals and say, all right, cool. Yeah, bearish, totally cool. Am I going to sell here? No. Can I take a counter trend trade? Sure. Well, we said price at the profit taking zone on a Tuesday, price up here by Thursday, but make sure you confirm that trade. Okay, cool. Another thing we're paying attention to right now is our yen pairs. Excuse me. So Aussie yen is a sell, but what we're paying attention to is, can we change our neutral bias on any of these yen pairs? And if that happens, right, that would be a good opportunity. So we're paying attention to those. Even though we're not trading them, we're paying attention very carefully to our fundamentals. How I see it in terms of a factory line, price, everything starts off with fundamentals. Once you've looked at your fundamentals, you've got a fundamental bias, you then go to technicals and verify things and look for opportunities to trade. But we can't go to technicals until we've left fundamentals. And right now, if it's neutral, you have no bias. If you've got no bias, you can't trade. I don't skip fundamentals and say, yeah, okay, fine, I've got a neutral bias in the Kiwi yen, but you know what? I'm going to ignore fundamentals and just go do some trading on the technical chart. That completely removes the power of fundamental analysis and a fundamental bias. Okay, make life easy for yourself. Yes, it means that maybe this week, if you're like me, you're waiting for price to pull back to the 4-hour time frame on those dollar pairs, you didn't get a pullback except for USD CAD. And you're like, okay, well, that means this week is pretty quiet. Okay, but look at last week. Last week was a power week. Okay, you've got to remain controlled and consistent and realize that if you're looking at your results day to day, that's too micro. You've got to be looking at your results week, month, year. Some days are diamonds, some days are stones. Some weeks are great performers and some weeks are a little bit less. Okay, you've got to be controlled. You've got to realize that this isn't about, making a ton of money in one day. Wayne's always said, if you're trading and you have a bad day, it shouldn't ruin your account. If you have a good day, it shouldn't, allow you to like, oh my goodness, I made so much money. Small, tiny movements, right? Slowly catch the monkey, and compounded over time equals a good track record and a good, healthy, volatility-free trading account. Clients like low volatility in the trading results. All right, cool. So let's get back together tomorrow. Have a look and see if you get any of those pullbacks. Keep an eye on those Aussie pairs. See if you get any opportunities for those counter trend trades. Realize you are counter trend trading, so be very, very strict in how you take profit on those trades. If you're getting in over here because you've verified things clearly on a lower time frame chart, you are getting out over there. That's it. That's the rule. Price can go up slightly more. Maybe you adjust for spread by putting your take profit just slightly below that. But that's the rule. Follow the pivot point theory in that situation. Profit comes off a profit taking zone. Price comes off a profit taking zone, heads up to the WPP. That's where you get out. You're not looking for long-term trades because your fundamental bias is bearish. Okay. You might decide to just not do counter trend trading at all. That's also totally fine. Good luck out there. Stay controlled, stay consistent, stay confident. And remember, patience, discipline. It is a behavior, it is a choice. You either are a patient trader, you either are a disciplined trader, or you're not. You can't be patient and disciplined yesterday, but today you decide not to be, because that is not consistency. I wish you all the best, my friends. Have a good day.